Now on to the North Korea's nuclear test impact on the economy. Officials in Seoul came together to evaluate the potential risks the event poses to the Korean economy. The South Korean stock market was hit for a little while, but the losses seem limited. Kim Min-ji has the digits and more.
South Korean shares were in for a hit Friday with the latest uncertainties on the Korean Peninsula. The benchmark KOSPI shed 1.25% to close at just under 2038. At one point, the main index had dipped to the lower 2030 level. The tech-heavy KOSDAQ also closed down 0.36%. The Korean won weakened against the US dollar, falling 5.81 from the previous close. But the general consensus is that the impact of North Korea's nuclear test will be limited, as it has been in the past, although it may take a toll on investor sentiment in the short run. After the North's fourth nuclear test in January, the KOSPI lost only 0.3%, with similar movements after the second and third test as well.
We think that the market impact will be short-lived, as it has been in the historical time. We think that the market have seen some immediate impact. For example, the Korean won saw about 0.5% depreciation on the news. However, within the 3 hours that the won has stabilized to 1100 level. The KOSPI has seen some outflow. However, we think that the investor sentiment will recover quickly as they realize that there will be no physical conflict between the two Koreas.
The slide has rather been attributed to negative sentiment following the European Central Bank's decision to keep its monetary policy on hold without further expansion and a possible rate hike in the U.S. In light of Friday's developments, the Finance Ministry convened an emergency meeting with officials from related agencies to discuss the situation and review necessary measures. While they believe the test will have a limited impact on the financial market and the overall economy, they're not ruling out the possibility of increased market volatility as global uncertainties, including a possible U.S. rate hike and the impact of Brexit, still linger. The government says it will operate an interagency team to monitor local and overseas markets around the clock and vow to take swift action if deemed necessary. Kim Min-ji, Arirang News.